Hello, everyone, and welcome back to another live stream where we're going to talk about what happened in yesterday's market. So, thank you so much for joining my live stream here today. I really appreciate having you guys here. So, welcome back to another live stream where we will be discussing everything that happened yesterday. So, we're living very important times in the market, as you guys know. So, we have a lot going on and we'll explain everything in today's live stream. So please make sure to stay on this live stream for as much as you can because what we're going to cover is very important and you guys should know about it. So if you don't know me, I'm Selena. Welcome to Selena Trading Moves. Here we discuss everything related to trading, related to stocks, and yes, you're going to find me live every time at 9:20 a.m. New York time. So if you guys have any questions or something, please do ask me in the comment section. And let's start our live stream of the day. So as you can see here, the oil price is going up again. So 3.5%. Let's analyze what actually happened in the world, which took us to another new jump here. So if I want to know what really is happening with the US market, we should go to the futures where we can see that the market is going down again after a quick shift yesterday where most most US companies and most US stocks have gained valuation up to 2 to 3% per stock and per index. So let's see what is still happening and what happened already in this day. So first of all, IDF is still launching new wave of strikes on Iran. So there's not really a new oh kills 7 fighters as it happened. So we can check it up and we can see what's really happening in today's market. First of all, oil is climbing again and Iran war is still going to continue. So what we saw yesterday was a false signal. Iran is increasingly very of efforts to secure a ceasefire. Fear that negotiations could expose senior leadership to hidden risks. The Wall Street Journal reported, citing Iranian officials and Arab counterparts familiar with the discussions. The Wall Street Journal said officials in Tehran are concerned that face-to-face talks could be used as a pretext for an assassination attempt on Parliament Speaker Galibaf, one of the few senior figures to have avoided Israeli strikes so far. The report added that Iran is also skeptical of US President Donald J. Trump's decision to delay strikes on Iranian energy infrastructure after what he described as productive talks, although we saw no productive talks happening between the two sides. So, it indicates indirect communications between the US and Iran are still ongoing but remain preliminary, with no imminent deal and fighting continuing alongside a build-up of US military sets in the region. So, the economy is sitting on the brink of a precipice, more severe than cocktail tariffs, coupled with Trump's instinct for self-preservation, which means a cessation in hostilities is more likely than not. Still, Christopher warned that reaching an agreement would be challenging. Bringing hostilities to an end would be easier said than done, and the Pentagon doesn't have full control over how and when the war will end. That's why he said, pointing to different risk tolerances between the US and Israel and the likelihood that Tehran will lose this capitulation. So, Iran has appointed this guy as Secretary of the Supreme Leader, replacing the guy who got killed by Israel. So, Saudi Crown Prince is also urging President Trump to continue military operations against Iran, telling the president that the current US-Israeli campaign represents a historic opportunity to reshape the Middle East, according to a report from the New York Times, citing people briefed by American officials on the discussions over the past week. The prince conveyed to Trump in multiple conversations that the US should pursue the destruction of Iran's hardline government. To people familiar with the talks end, the Saudi leader has argued that Iran represents a long-term threat to the Gulf region. Yes, Jan, yes, the price of crude oil has gone up, and that is truly worrying. If you go back to here, well, you can see that the price is going up again. So we can see that the price of crude oil is going up again, reaching new levels. So this was the last rejection zone that we have seen in Friday, Wednesday, and Friday, and then Thursday too. So I've seen it 4 times in a row. And also, well, the price hit a new high not the last Friday, but 2 Fridays ago. So this could be either a shift or maybe it will still go up. This goes back to many different um cases and scenarios that we're checking right now on our on our live stream, okay? So we go back here again. Saudi Arabia, UAE reportedly mulling joining war on Iran. So these two countries are willing to join because missile strikes supposedly hit areas across the Middle East on Tuesday, while two major Persian Gulf countries are reportedly considering joining the fight against Iran after the US and Tehran offered construction accounts of further potential negotiation over halting the nearly month-old war have taken place. Okay, so we're 4 days, 4 days left, and we'll be on 1 month of this war already. So it's been 1 month. Uh, okay, we need four days, and then it's gonna be 1 month. Okay. So, authorities in Israel said a barrage of missiles from Iran struck Tel Aviv again and other parts of the country. So, Kuwait and Saudi Arabia have been targeted by drones and also in Lebanon. So, the waterway Strait of Hormuz, south of Iran, through which 1/5 of the world oil passes every day, has remained all but shuttered to tanker traffic. The effective closure of the strait has become a major flashpoint in the joint US-Israeli assault on Iran, crimping the flow of the critical supplies to countries around the world, especially heavy imports in Asia. Both Saudi Arabia and the UAE, whose economy is dependent in large part on energy shipping through the Strait of Hormuz, are now edging toward ending the fight against Iran. Wall Street Journal has reported. Saudi people familiar with the Saudi decision to allow U.S. forces to use an airbase on the western side of the Arabian Peninsula. So in order that Crown Prince Mohammed bin Salman is close to deciding to join in the attacks, the UAE is also beginning to crack down on Iranian-owned assets. So this could be a great shift of the war, okay? This could be a massive news because if it actually happens, well, we can just say that that's going to cause a great big problem, okay? So all prices are going up again and the war is still going. There's no productive talks, there's no nothing. There's no delay of strikes. There's just market unstable. So again, stock futures fell on Tuesday. As we've seen here on our previous futures chart, Nasdaq. So we have the Nasdaq, E-mini Nasdaq is also falling, is still falling today. Same thing goes for ES. So let's check it out. See, same thing goes to ESP 500. Okay, so the futures is already falling. It went from we closed yesterday at 6,635 and we are at 6,596. So this stock is still going down, and for the S&P 500 index, we didn't open for the day, so we're waiting for the opening to see what's really going to happen. Von der Leyen says global energy situation is critical. So, Wall Street major averages notched strong gains in the price session. Sentiment was buoyed by President Donald J. Trump's announcement of a temporary delay in impending U.S. strikes on Iranian power plants. But as I said already in my video, if you guys checked it out, that doesn't mean there's a potential there's a potential um there's a potential recovery in the market. The market is still not really stable for the moment. So we should wait for really great information that's going to serve us into actually taking a trade. So right now, the market conditions that we have today are not stable at all because we, as you guys have seen here already, look at how the market fell again at 330. So major stocks fell yesterday. Although we've seen it going up, if they all ended falling by 330, then recovered a bit. But as I said, the Speaker of Iran's parliament rejected the claim, accusing Trump of rolling out the comments to help soothe volatile financial markets. Markets are walking a tightrope between fragile optimism and escalating geopolitical risk. The Middle East remains the dominant driver, with oil prices highly sensitive to any supply disruptions. As tensions persist, volatility is likely to stay elevated. Oil prices, which have been in sharp focus for markets since the outbreak of the war in late February, once again climbed above 100 a barrel. Okay? Futures expired in May for Brent crude, while last up to 99.1 a barrel. So, there's no end for the war, as I told you guys yesterday. So I said, if really Iran said that we had no talks with Trump, that means that there is nothing that happened. There were no productive talks, no nothing. That was just a try by the government to ease the situation a bit because we were going through something which is very, very well understandable. So that's why I am telling you right now we should be more focusing on what to do next. So if we go and buy whatever, we will be. So we will be facing a new situation. And I've just seen Chris Murphy making a comment on Twitter. He said $1.5 billion. I repeat it, $1.5 billion. That was a bet with a value of $1.5 billion, bigger than any operation of buying US stock futures that happened 5 minutes before Trump's post, okay? So 5 minutes before Trump said, "Oh, we're reaching an agreement," blah blah blah. Someone bought 1.5 million billion dollars worth of future stocks. So who's behind that? Is it Trump himself, or someone from his family, or someone in the White House? This is corruption, full corruption. So this might be the reason why really Trump said that there was a ceasefire with Iran, etc. Well, I am telling you, the situation is a bit tense. Iran is increasingly wary of efforts to secure a ceasefire. Further negotiations could expose senior leadership to heightened risks. WSG reported, cited Iranian officials and Arab counterparts familiar with the discussions. The Wall Street Journal said officials in Tehran are concerned that face-to-face talks could be used as a pretext for an assassination attempt on parliament speaker. Okay? So what we're seeing is actually understandable. So we understand that they don't really want to make an agreement with Trump. So but at the same time, we should all be cautious because many people fell on the trap yesterday. They were like, "Oh, that's great! Finally, the market is recovering, etc." But what's the most important stock to watch right now? It is the, yes, as you guys know, it's the US, it's crude oil. It's basically oil. So oil is telling you everything. If oil is not stable, if it's still going up, well, that means it will keep going up, okay? So you have the market open now, and all the major US stocks and the indexes are opening on a red, are all bearish right now. So as you can see here, most of those stocks are operating on a bearish level. DJI is suffering the most losses because it's more traditional and oil is gaining more valuation. Okay? So WTI rebounds slightly. West Texas crude oil futures traded higher, around $91 per barrel on Tuesday, recovering part of the sharp 10% drop seen in the previous session. Dow gains were more limited as markets remain volatile. Oil moved higher in choppy trading as investors waited escalating geopolitical tensions. U.S. allies, including Saudi Arabia and the UAE, have taken a firmer stance against Iran following attacks on the territories. So if we see all countries joining the war, that means we have no end for this war, okay? So President Trump's move to postpone strikes on Iranian energy infrastructure and power plants for 5 days provides relief for oil and gas markets. So that wasn't true. That was a quick, a 3 hours relief, but then we suffered bigger problems. Many people got trapped in yesterday's market conditions. Many people went to buy. They thought, oh, finally, the market is recovering. Although I told you guys many times, this is not the time to go onto a trade because the market conditions are not clear. Don't invest in something they're not actually like slightly believe it that's true, okay? So if you really want to invest, know what you're investing in. Don't just go and buy whatever you want. Because the market conditions we have today are not really safe. Market conditions today are not safe. If you want to trade, you should actually know when to trade and when to not trade. So if you guys want to invest now, I am telling you, just stay cautious. Don't be driven by, oh, yeah, I mean, it's so like it's relieved, blah, 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 whatever. No, it doesn't work like that. In today's market conditions, there's nothing that can change the market conditions today. Even if you go to the economic calendar, that's not going to change any damn thing in today's market conditions. These are not important today, okay? Okay, so we had the PMI coming for the S&P. That might be interesting news, okay? So let's check it out. So what's the forecast? So the actual is 51.6, previous was 51.2. Manufacturing PMI measures the activity level of purchasing managers in the manufacturing sector. A reading above 50 indicates expansion in the sector. Below 50 indicates contraction. Traders watch these surveys closely as purchasing managers usually have early access to data about their company's performance, which can be a leading indicator of overall economic performance. A higher than expected reading should be taken as positive for the USD, while a lower than expected reading should be taken as negative for the USD. So, okay, so the forecast was 51.6, but the forecast is 51.5. Because the actual is 51.6. So let's check what happened at the time. Let's go back to the S&P. 2nd of March. Okay, this one. Okay, because it was way too positive, it took us to an uptrend. Oh wow. Look at how we went from this level in April to this level right now. So yes, we're basically touching the support zone I had from here. Okay? So it's on technical plus fundamental. That's how you make money in trading. So as you guys can see here, this was the previous level I had for supports, okay? So the likely situation to happen now. is that the forecast, which is, so what's the forecast, okay? Forecast is 51.5. Previous was 51.6. If it's higher, that's a good thing, okay? Let's see what time did it actually go up. This one. Okay, here. So it happened around here. Then the market went up. We can even make the 15 minutes so we can actually analyze what happened, okay? 2nd of March, you had so much valuation, and then, as you can see, you already opened positive, okay? So the market already was already positive. So we're back to this correction level here. We went here on 20 November. So future track and US equity indices were steady on Tuesday, holding yesterday's rebound from 6 o'clock close as market continued to assess risk of stagnation stemming from this month's surge in energy prices. So let's go back with what is more to see today. Okay, so forecast is 52. Previous was 51.7. So you can see going up for the S&P Global Services, but going down for global manufacturing PMI. So we had exactly 6 minutes left for that. So let's check for newest news that we have right now in the market. So stocks open on. So if you felt like the market finally gave you some breathing room, and then just pull the rug again. Yeah, you look crazy. We just had that little relief rally. Things looked stable for a second, and now we're rolling over again. So let's talk what's actually going on because this move down isn't random. First thing, you have to understand what that bounce actually was. That wasn't a new ball market starting. That was positioning. People were too bearish, shorts were crowded, and the market squeezed up. Simple as that. You get a bit of good news or even just less bad news, and boom, market just bounce. Well, that doesn't fix the bigger picture. Now, why are we going down again? Because the core problems never left. Interest rates are still high, inflation is still sticky, and liquidity is not really coming back. And valuations, especially in tech, are still stretched. So what you're seeing now is reality kicking back in after that short-term optimism. And this is where most people get trapped. The rally gives you hope. You start thinking, okay, maybe the bottom is in and the market turns again. And that's how money gets taken emotionally. Smart money doesn't chase that bounce. They use it. Look at what's happening across the board. Stocks are losing momentum again. Nasdaq is especially weak because it ran the most. Oil is still elevated because inflation pressure is still there and gold is not acting like full panic yet. So there's no real fear spike. So this isn't a crash environment. It's more like a slow reality check. So what does this actually mean going forward? It means you're probably not in a clean trend. This is more of a choppy market where allies don't last, dips don't fully collapse, and people keep getting faked out both ways. Basically, a trader's market, but not an investor's dream. So yeah, if you were feeling good 2 days ago and now confused again, That's literally the environment we're in. The market is not trying to be clear right now. It's just testing people. So let me know, what do you guys think? Are we just pulling back before another move up? Or was that rally the exit liquidity? Because right now it could go both ways. So I am telling you guys, the situation we have right now is very, very dangerous. So as I said, the situation is very dangerous, and yeah, uh, it's a bit unclear on what to do next in today's market conditions, especially when we have all of this going on. This market is still not clear because yes, here as you can see, all prices jump, and okay, this is important. A study case done by Barclays. Barclays retains a bullish view on the US equities outlook despite a more fragile macro backdrop, raising its SP 500 earnings and price target and argued the markets are not showing signs of panic. Macro risk can rise in, but the US still leads on dominant growth and tech-led secular tailwinds. Strategist led by Venu Krishna said in a Tuesday note, the broker has lifted to its 2026 SP 500 EPS forecast to $321 from 305 and increased its year-end target to 7,650 from 7,400, driven chiefly by strong earnings. We are incrementally bullish on the profit outlook, the strategist wrote. The upgrade reflects solid guidance from technology companies, improving industrial activity, and resilient nominal growth. These factors are expected to offset weaker growth outside the US and favor consumer comparisons later in the year. Barclays noted that its new EPS estimate sits broadly in line with the street at 322 for the year-end target high in 2026, with inflation remaining sticky but well anchored. At the same time, risks are skewed to the downside. Strategists warn that the distribution of outcomes that shifted left, with its severe gains target at 5,900. Okay, that's interesting. Okay, so gold fails as Iran rejects U.S. stock claims. Oh, sorry guys, you have to check on the S&P now. So there's no news yet. The actual is 52.4. That's a good sign. And this one is red. So one's green, one is red. See, and that's the greatest sign I was telling you guys. If you see, the markets are not driven by market conditions anymore. So as you can see, we had an important day for the S&P, and it's still not going up or going down. It basically did no reaction. PMI data are released monthly in advance of comparable official economic data. So as you guys saw, it didn't do anything to the stock index because basically we're driven by geopolitical tensions right now. But as of today, there's not really something important happening in today's market conditions, okay? So there's no important um things coming up because yes, we've seen oil is going up, gold is going down, Apple, S&P 500 is also going down. So all the major US stocks except for Tesla is the only one that's gaining from this past from from yesterday today. Okay? So yesterday Tesla was at 367, but now at 387. So I think Tesla is the one that's performing today and yesterday. So it's very driven because European car sales are going up for Tesla. Tesla stock is going for two gains in a row on Tuesday. Two things could help it get there: semiconductors and EV sales. Shares of the electric vehicle maker were little change in pre-market trading at $380, while the S&P and Dow Jones both were down about 0.2%. Tesla stock gained 3% on Monday, stopping a brutal 3-day losing streak that sent shares down almost 8%. Tesla stock has lacked positive momentum for a while. Coming into Monday trading, shares has declined for 5 consecutive weeks, dropping almost 12% in the process. European investors are waiting for some good news. European sales in February and one bit of good news for investors to consider. So, as you guys can see here, Tesla is the only one benefiting from what's happening. Okay, not really benefiting, but it's performing. So NVDA is going down, Microsoft, all the major. So Microsoft is suffering the biggest loss. Let's see if there's something else that's driving um this move, okay? Well, not really. There's nothing that's taking us to this move. It's just something that happened with their stock. So Microsoft price target announced at 500 per share by BofA Securities. So here, wow, I don't see that happening in the next few days. But the stock really went through downward from 550 back in October to its lowest in over a year. Okay, so the situation is very bad for Microsoft. I don't know what exactly happened with them. $6 months, okay? Yeah, that's the lowest in a week, in a year. Okay, let's make it monthly. Wow, since last May, okay? So they were at this level last April, and they're back to it. So they went up to really 560, and now they're back to 370. 50% loss for Microsoft. So stocks are not that stable anymore. Apple is back to its concentration level, so we're going to see how it will it will perform in the next few days, okay? So this rejection zone is very important. Let me mark it. This is a very important zone because if you see here, we have been ejected from the same level three in 3 different months to 143. Let's see if the price will go back here and then correct. So in this month, we're on a big red candle. Same thing goes for Tesla, who's been on a low for 3 months already. NVDA for the second month. Microsoft for 1, 2, 3, 4, fifth month, okay? And of course, second for SP 500, second for Nasdaq, and first for DJI, who lost a lot of value in this month. So we went from 50,000 last February to 45 right now. Are there any high quality stocks that you can recommend for purchase? Well, we can make a quick look because into those market conditions, I don't think it's going to be a good thing. Except for Circle, well, this is one of the greatest stocks you can invest in right now. Okay, so if you find a great move for Circle, you can just go in because that's going to be a great move for you. Same thing goes for Chevron, who's been going up for a while. So for all the big tech companies, they're all losing valuation. So second month for Meta, yes. Amazon kind of performed, but it's back to the same level. So you can see the candle. How about Micro? Okay, so we went to the same level again. That's how we closed. Wow, does happen a lot of times. What happened for them? Google is on its second losing streak. So the American economy is not benefiting from the war, and the government should understand this. But right now, we're way too late to do it. So the situation in the Middle East is still going worse, okay? It's continuing to worsen every single month. And now, Palantir is also doing good. So if I tell you, I'd say Palantir and Micron, and also Circle, are one of the best stocks you can invest in right now. Coinbase is not too good, but for all these major stocks, they're all suffering. So God has seen the major rush since January. We've seen it go up. And the last time we saw these levels was back in the war, the Ukrainian war, okay? In COVID, the prices were actually so down. Zero point 0.23, wow. I remember this was the funniest day. So, I mean, you have already seen these levels, especially here. In the financial crisis of 2008, then it went down again. And the prices were controlled in September. So as you can see, these are the normal prices of oil right now. So these are the normal prices here. You can see 60, 50, 70, but 100 is not acceptable. So we started the month at 74, and we're kind of back to the same level here, okay? So for this one, it kept going up for way too many months. Then we've seen it go down, okay? So January, February, especially when the war started, March, sorry, yeah, it started late February. We've seen it go on a rush, then went down again, went up for a bit till January, and then the prices went down. So we're going to see the same thing, same story happening once again. But this one is more it's is more and more important because it's 20%. Okay, let's compare it. How much oil uh did we lose in Russian war? The region in percentage. Okay, so we can just write in percentage of the world's demand for oil. Right, as you can see here, Russian oil exports totaled roughly 7.5 million barrels, representing 7 to 8% of total global oil production. So, Russia accounts for approximately 12% of global oil production, making it a major though non-exclusive source of global demand. China, India, and Turkey before 20. So, as you can see here, there's a big difference. Russia used to export 12% to the global economy, but right now we're talking about 20% plus the Iranian oil. So, the situation is different. You're welcome, Suki. Thank you so much. You're welcome, Suki. That's my pleasure to help you, okay? So, the situation is a bit tense, okay? And I am telling you guys, um, okay, let me refresh. I am back. You're back, okay? So, let's go to the latest news again. Stocks opened in the red amid higher oil prices. So, these are the news we saw today. US business activity slows to 11-month low amid Iran war strains. So, this is just to tell you guys, um, it's actually very, very hard to keep the war going on because the US economies are benefiting. US business activity growth slowed to an 11-month low in March as businesses grapple with increased uncertainty and rising living costs linked to the nearly month-old war in Iran. S&P's global US Composite Purchasing Managers Index fell to 51.4 this month, compared to 51.9 in February. A reading above 50 denotes expansion. The service sector, a major driver of the overall and American economy, was harder hit by inflationary pressures sparked by the conflict than the manufacturing industry. S&P Global said, services PMI also slipped to 51.1 from 51.7 previously, the lowest such figure in 11 months. So manufacturing PMI, meanwhile, ticked up to 52.9, a two-month high. In a statement, Chris Williamson, chief business economist at S&P Global Market Intelligence, said the survey data for March signal an unwelcome combination of slower growth and rising inflation following the outbreak of the joint US-Israeli assault on Iran in late February. Companies are reporting a hit to demand from the additional uncertainty and cost of living impact generated by the conflict. Its travel, transport, and tourism-related issues are compounded by financial market jitters and affordability constraints, notably including concern over the impact of higher interest rates, surging energy prices, and supply chains delay, okay? So, market conditions are very hard. I'm not going to lie. It's very hard to keep up in these conditions. What's new? No, thank you. So let's go to oil. Let's see the latest news here. So Tesla stock jumps 3.5% after. Oh, okay. So Tesla actually unveiled Telefab joint venture project. Joint venture spans Tesla XAI and SpaceX. Initial chip production targeted for late 2027. He announced a chip factory, Telefab. Seems like investors are ready to say, Buongiorno Villa, to the new life is a semiconductor manufacturing plant that will be built as a joint venture among Tesla and SpaceX. It was announced as a defunct power plant to the theatrical flair that has become a Musk signature. They will spend approximately 20 billion on new equipment, though Telefab spending sits on top of that figure separately. So his ambition to produce chips, okay? So that's good. Next we have, okay, let's go to important news. Markets news. So the markets, the relief rally in global markets on Monday turned out to be short-lived as renewed worries about an escalation in the conflict dampened sentiment and pushed crude oil price higher. Wall Street futures are trading in the red. Benchmarks in Europe are also trading in negative territory. Earlier in the day, Asian markets had finished trading on a positive note. The dollar index has rebounded sharply. Bond yields mostly hardened, while the crude oil benchmark have changed course after Monday's massive plunge, allowed trading with overnight gains of more than 3% and monthly gains of more than 40%. So, as you can see here, most of the big. Oh, let's see the dollar, by the way. We didn't even see a dollar. So, how is USD doing? How is USD index? Okay. So, USD. Oh, okay. No, not you. 99.4. Okay. So, this is a monkey one. That's a monkey one. Let's make it 4 hours. It's not too volatile. So, $1 equals 99.4. So, apples here. And yes, as you guys can see, So today's market conditions just shows us one thing. The markets are still suffering. That's one thing that we need to know. Except for TAFAB that's benefiting Tesla and Apple that's going up for no reason. Apple gains on record iPhone upgrades. Apple price target is 315. Okay. So let's go here, check the latest news of Apple. So let's check Apple's news here. So as you can see, SPX, Nasdaq, TGI are all falling. Nvidia is also falling. Microsoft is also going down. So all the major stocks are going down. Oil, mm. So as you guys can see here, all the stocks are not really doing any change. Okay. So for now, the situation is a bit too tense in the market. Right now, everyone is waiting. What should we do next? That's very I don't know whatever we could say because right now the situation is too tense. I can simply not explain it. So how is Bitcoin also BTC? Yeah, went up yesterday. Oh yeah, that was Tuesday 24th. Oh, went up today actually, but now it's going down for no reason. Hmm. Okay. So it's on 70 at least. We hit the 70. That's what you wanted, right, guys? So let's mark it on 70. Here. Okay, so we hit 70 exactly. Then we're still going down though. 0.87% for Bitcoin with a market cap of 1.4 trillion USD. So as I already said, all the stocks are still going down. So this is not the time to trade, okay? This is a brief summary of what happened today. Relief rally fades as Middle East conflict keeps Wall Street on edge. Main US indexes fall, Nasdaq down the most, off by 0.6%. S&P Global also from March is PMI is good, but SVACS PMIs are good. Dollar rises, US crude rallies, and relief really fades as Middle East conflict keeps Wall Street on edge. Wall Street stocks are trading in the red as major uncertainty over the war in the Middle East continues to weigh on investor sentiment. Markets remain on edge as Iran and Israel press ahead with retaliatory strikes, raising fears of a broader and more prolonged conflict. On Monday, U.S. equities got a bid after President Trump said he would delay planned strikes on Iran's power grid, pointing to what he described as productive talks with Iranian officials. The announcement pushed major U.S. indexes more than 1% higher, despite Tehran insisting that no negotiations with Washington were underway. The relief rally proved short-lived as questions resurfaced over the true state of diplomacy and the trajectory of the conflict. Optimism faded and caution returned to Wall Street. So, President Trade did offer a 5-day reprieve not to destroy Iran's electricity grid. He offered the olive branch that when you come to think of it, the clerics will never accept. So, this wasn't over, so I suggest that nobody gets over their skis on this one. Only 4 of the 11 S&P 500 sectors are up on the day, with energy up more than 2%, posing the biggest gain. Tech and communication services both down around 1%. So you really, um, you can say you are just someone who loves adventures if you go trade in today's market conditions. US equity indices were lowered on Tuesday, trimming yesterday's rebound as faded hopes of the escalation in the Middle East revisited higher risk of stagflation. S&P, Dow, and Nasdaq fell over 0.5%. Iran continued to strike targets in Israel and GCC members to turn expectations of an imminent de-escalation to the conflict, while Israel accelerated the pace of strikes on both Iran and Lebanon. These offset signs of de-escalation by the US after President Trump delayed attacks for 5 days due to constructive talks with Iran, which triggered a rebound in risk sentiment. Yesterday, despite Iran denying said talks, tech giants with exposure to credit costs fell sharply, with Microsoft and Amazon both losing more than 1%. So, this is what really happening in today's market conditions. Okay, S&P is following all the big tech companies, all the big indexes are falling. So it's like you're risking your life adventure if you just go and trade in today's market condition. So Tesla's European sales finally increased. So what is Google saying? Major US indices opened with mixed results on March 24th, 2026, as investors navigated the shift in market sentiment following a strong rally the previous day, while the S&P 500 and Nasdaq showed early resilience, with modest gains driven by mega-cap technology leaders like NVDA and MSFT. The Dow Jones Industrial Average faced downward pressure due to concerns over manufacturing data and a pullback in cyclical stocks. So while this pullback might already be over, let's check it out. A key S&P 500 signal and easing geopolitical risk could set up the next rally. The stock market may be entering a bullish phase. A key S&P 500 signal historically leads to strong forward returns, while volatility are falling as markets shift from escalation to de-escalation. So, as you can see here, when the US launched Operation Epic Fury, a high-intensity air campaign intended to dismantle the Iranian regime security apparatus, while oil surged, volatility spiked, and the S&P 500 broke below its 200 moving average, although I don't believe in this. So, the market was kinda manipulated yesterday. Many people thought we're finally seeing a new phase for the war. But that's not the case. We are still going on big problems in the Middle East, okay? So I see what people are giving their analysis here. That's great. But today's market conditions don't know um what that what does that mean, okay? So in today's market conditions, we only know what's going to happen next for so BTC already fell below 70. Yeah. So that was something expected. Nasdaq is within the most valuation, up to 80%, and yes, only 11 companies out of the 500 companies in S&P 500 made profit today. So that's why I'm telling you guys, it's too risky to buy right now. So as you guys can see here, they're on 12 on Tuesday. So that's not the time to go and take a trade in today's market conditions. Just wait for new information to drop, okay? So what do we have tomorrow in the economic calendar? Oh, so Wednesday is the time for the crude oil inventories. Modi Trump discuss importance of keeping Strait of Hormuz open. They spoke by phone on Tuesday and discussed the situation in the Middle East, including the importance of keeping the Strait of Hormuz open. So there's nothing new coming in. So everyone is confused on what to do in these market conditions. So I am telling you guys, if you go and trade, that means you want to risk, you want to see um some really um amazing you can say amazing adventure happening with you, okay? So all these stocks are red except this one. Let's check it out. Okay, never mind. So here, so David Wagner said, let's see his analysis. He's a great guy. He's my friend. He's a great guy. I really appreciate him. So then S&P 500 stock settled for a rebound after recent sell-off. Markets rallied on Monday following comments from President Donald Trump. Investors hope the worst of the impact of the war with Iran is over. Which S&P 500 stocks on discount should you focus on in case of a sustained rebound? The S&P 500 fell to 6,470 last Friday, its lowest level since late August 2025. It then started the new week with a strong bounce, rising 1.15% on Monday after positive comments from President Donald Trump about the Iran situation. Over the weekend, Trump had worried markets by warning Iran. By Monday, he said he had productive talks with Iran, which lifted investor sentiment and pushed stocks higher. Oil prices also dropped sharply, falling about 10% at one point during the day. Later, the optimism faded. Iranian officials said there had been no talks with the United States, directly contradicting Trump's statement. At the same time, reports suggested that some Asian and Gulf countries were trying to mediate between the two sides. This kept hopes alive for a possible improvement, but the conflict itself continues. With airstrikes between Iran and nearby Gulf countries still ongoing, oil prices moved up again after Iran denied any talks. So at the same time, futures for US stock markets suggest a weaker opening on Tuesday. Many investors still believe the worst may be over and that the SP 500 may avoid further declines. In this situation, it may be a good time to look at stocks that have dropped the most in recent weeks, especially within the S&P 500. These could offer attractive opportunities if the market starts a steady recovery. So that's actually a great thing, okay? I'm telling you guys, that's actually very important. Mm. So we should wait for the new market conditions to drop before making a taking any signal, okay? So we should be waiting before any new signal. So let's see if there's any news that were dropped now. So guys, I'm gonna be honest with you. Look, this is one of these moments where the market looks easy, but it's actually not. Like, yeah, you open your chart, things are moving, some stocks are holding up, crypto's bouncing. It just feels tradable, but that's exactly where people get caught. Because right now, nothing is really key. You've got the headlines changing every day. Yesterday, we had relief, and 1 minute, it's cooling off. So, it's inflation fears again that suddenly oil just spikes again, as you guys can see here. So yesterday we had this in red, everything else was green. Now it's the contrary, and the market reacts to all of it, but not consistently, and that's the problem. Back then you had trends you could trust a bit more, but now it's like fake moves, quick reversals, and traps everywhere. You think a breakout is real, it fades. You think a dip is a buy, it keeps dipping. So if you're feeling a bit confused trading right now, that is normal. It's not just you. And honestly, this is where discipline matters more than skill. Because in markets like this, overtraders will just kill you faster than being wrong. You don't need to catch or remove. You don't need to be in the market every day. Sometimes the best position is just waiting and analyzing the market, like actually sitting on your hands and letting things become clearer. Because when the market is clean, it feels different. Moves follow through, levels respect, tires structure. Right now, it's messy. So instead of forcing trades, just ask yourself, is this setup actually clean? Or am I just bored and want action? So be real with yourself, protect your capital. That's the game. There's always another opportunity, but only if you're still in the game to take it. So I'm gonna take a bit more time on this because I feel like people are underestimating what kind of market we're actually in right now. Everyone is asking, is this bullish? Is this bearish? But the truth is, it's neither cleanly. It's reactive, and reactive markets are the hardest one to trade because it's a moving of structure, it's moving of headlines, positioning, and short-term flows. One day tech looks strong, next day it's lagging. Oil moves, yields move, and suddenly equities ignore it. Gold should be doing one thing, and it does the opposite. But that's not random, that's a market that doesn't have conviction. And when the market doesn't have conviction, you shouldn't either. That's the part people don't like to hear. And right now, a lot of moves you're seeing, they're not real trend moves, they're liquidity grabs. Price goes up just enough to pull in buyers, then it reverses again. Drops just enough to scare people out, and then it bounces. It's basically the market forming impatient traders. So, if you're chasing breakouts right now, you're basically feeding that system. And I'm not saying don't trade at all. I'm saying you need to be way more selective than usual. Like, your A plus setup, just take it. Everything else, just leave it. Also, position size it. This is not the time to be going heavy. If you normally trade size 10, maybe you should be at 5 right now. If you're already unsure, then why are you risking the full size? That is called ego trading. And market just like to punish ego as fast as they can. And let me say something a bit uncomfortable. Some of you are not losing because the market is bad. You're losing because you're forcing trades in a bad market. That's a difference. There's a difference. A good trader adapts. A stubborn trader blames conditions but keeps doing the same thing. So just pause and ask yourself, have you changed anything about your approach recently? Or are you just trading like it's still a clean, trending market? Because the reality is, this environment is more about survival than performance. It's not about making the most money right now. It's about not giving it back before the real opportunities show up. And they will show up, they always do. But the only traders who stayed patient, who didn't burn out mentally, who didn't blow their accounts chasing noise, those are the ones who are ready when it matters. So take your time, wait for clarity, and when it comes, that's when you step in properly. But not now. Don't be that trader that just reacts to clicking buttons and hoping something that sticks. So I hope you guys really understood the meaning of what I wanted to say because it's very important, especially in these market conditions. You have a war going on. You have a stock market that was so positive yesterday. Now we're seeing a different thing. We're seeing all the stocks going up again, climbing, and the situation is just not clear, okay? So what the escalation would mean for markets? If the escalation continues and early signals suggest that may be the direction, plausible all could retreat to the 65. Well, these are just dreams, okay? So we had dreams yesterday, but that would never happen in these market conditions. Until we see a signed contract, then we can say the war officially ended. If we see Trump shaking an Iranian government head, his hand, then you can say, oh, okay, the war like officially ended. But in these market conditions, no, we're still going on. We still have uh, more and more to come in the near future. So be cautious. Don't just go and trade in everything you see in front of you. That could be one of the worst decisions you will ever make. Okay. So Tesla is the other one making some profit. Apple also because of their European sales. Nvidia, Microsoft, all the other stocks are losing valuation. On is didn't really go to um bad places as it used to do before, but now the market conditions are still the same. So don't just go and buy whatever you find in front of you guys because that's going to be one of the most stupid decisions you will ever make, okay? So if you guys have any questions, I will be ending this live stream. So it was a great pleasure. So to just wrap this up, right now, it's not about being a hero in the market. It's about being smart enough to recognize the conditions aren't clean. There's no clear trend, no real conviction, just a lot of noise, fake moves, and reactions to headlines. So, if trading feels harder than usual, that's because it is. And in times like this, the goal isn't to make the most money, it's to protect your capital and stay in the game. Be selective, lower your size if you need to, and don't force trades just because you feel like you should be doing something. Sometimes doing nothing is actually the best move. The market will give better opportunities. It always does. You just need to be patient enough to be there when it happens. So that's it for me for today. Thank you so much for watching this live stream today. Please stay sharp. Don't just go with any position, and stay cautious because today's market conditions are not clear. So if you guys have any other questions, please do let me know in the comment section, okay? So thank you guys, and I wish you have a great day. End of the day, and I'll see you again tomorrow on the first two videos. Then on my live stream at the same time to analyze what happened to the stock market again. Thank you and goodbye.